Hello and welcome to Connect, the weekly podcast of the California MBA, featuring one-on-one interviews with movers and shakers in the mortgage industry. I'm Susan Milazzo, CEO of the California MBA, and very happy that you could join us today. Before I welcome today's guest, I'd like to thank our 2024 President's Council sponsors. And these are companies that provide a tremendous level of financial support to the association this year, in large part so that we can continue to be that strong advocate for the real estate finance industry before the California State Legislature and our regulators. And this year, we're also involved in some of the ballot initiatives. So please join me in thanking this year's President's Council sponsors. And those companies are AmeriHome, Arch MI, CMG Financial, Consolidated Analytics, Funding Shield, Guild Mortgage, and Western Alliance Bank. Thank you all so much for your support this year. We greatly appreciate it. And with that, I'd like to welcome today's guest. I am welcoming David Shirk, who is managing member of Shirk Law, to the podcast. David, welcome.
Thank you, Susan. Happy to be here.
I'm glad that we got this worked out. I always kind of like to start these conversations with a little bit of background. So why don't you share with us how you became into legal representation in the mortgage industry?
Yeah, it's kind of a long story. I'll try and nutshell it. I started in the business working for my in-laws, and they had a little mortgage company. I did just about everything there is to do in a mortgage company. Ended up automating their servicing software, writing doc prep system for them, started a wholesale division, and throughout that time became the chief operating officer and the chief compliance officer. I considered law school back then, but had obligations in the office, and it wasn't going to be feasible for me to go back to school at the time. So I did do a lot of policy level advocacy. I was on the negotiated rulemaking on RESPA in 1995 on the yield spread premium issues, and served on the Fed's Consumer Advisory Council for 3 years. So a lot of interaction on federal and state issues, and found myself looking for new software, and they found themselves looking for someone who could help them with some compliance controls in that software, and ended up going to the tech side of things. I designed loan origination systems for 3 top 10 lenders, optimizing their workflows, designing product and pricing engines and automation systems for that. And then I'll step back in as a CEO for a couple of mortgage companies in 2006. It wasn't a great time. We ended up winding down one of those companies and holding on to the other through that. And at that point, I decided it was time to go back to law school. So completed law school, and Dodd-Frank's regulations were starting to roll out. And so I've been involved in that for the whole time since that stuff has completely changed what compliance was in the industry. And that's kind of the story.
That's kind of the story. Well, they have a very interesting background from being, a lawyer in this industry. I had no idea of your technology background. I'm gonna have to get you involved in our Mortgage Innovators Conference, since you've got so much great history in mortgage technology there.
Yeah, I'm a big advocate of AI and the things that it can do, but also from the legal side, being very cautious about how that's entered into and understanding that the law is changing around that. So yeah, it's a really exciting space. There's a lot happening, but it does require some care.
Well, I'll have to talk with you offline about being on our legislative committee next year, because there's a ton of AI bills this year, and we expect more in 2025. So maybe we can get you involved in that in the new year when session starts again. I know Shirk Law has a number of practice areas, but loan officer compensation issues continue to be top of mind for lenders. What are some of the issues you're seeing in the market these days on LO comp?
Well, we're seeing all the same things over and over again. Things that I changed in 2006 at my company when I was the CEO that eventually became law in 2009 with the Fed. Um, Compensation is always a hot topic. Um, right now, we're coming through the roll off of refinance into purchase transactions where everybody was shifting and looking for part-time employment, and now as rates are coming down, they're starting to bring people back on full-time. The part-time and full-time space is really tricky, and that ties into commission and overtime obligations. And the idea of having all of your originators stay on as part-time commission only sounds great, but it may not work out well with the regulators and with wage and hour law. So we've dealt with quite a bit of issues around those topics. With the NAR settlement, real estate agents are now having a real significant turnover, and since that's not too far since HUD had removed the conflict provision with respect to real estate agents, there is a lot of talk about engaging real estate agents as loan originators. And that's possible, but it's got to be done very carefully. Again, they have to be bona fide employees. They have to be real employees. And that part-time and full-time thing ties into that as well. Compensating them can be very tricky.
Yeah, it seems like, the focus on LO comp, like you say, like it's the same issues that you keep going back to. It's like almost the industry has a hard time wrapping their mind around kind of what it is that they need to do. And you think, you mentioned that was going to be kind of my follow-up question is how the NAR settlement has impacted, the real estate agent employment circumstances. But you've kind of talked about that. It is another big, factor in all of LO comp.
Yeah, so the NAR settlement itself, affects what the real estate agent's commission is. And so with that uncertainty comes, open hands seeking revenue and a lot of RESPA pressure again. But from a originator compensation perspective, that has to be really carefully looked at. I've seen things, I've written opinions about engaging real estate agents as employees, and I think it can be done. But again, it requires a lot of consideration. The fact that HUD said that they won't prohibit the potential conflict of interest doesn't mean there isn't a conflict of interest. And so you've got to be concerned about what those conflicts are and how that works and manage it properly. So you don't end up with secondary market, concerns being raised. And then manager compensation is another big area, and bringing on branch managers that we deal with. But tied in with real estate agent compensation, we frequently see the brokers wanting to get a management fee, and be a branch manager at the location of the real estate office. The more those things tie in, the more difficult it is. Having an employee is one thing. Having a remote manager is a whole nother thing to try and establish, the bona fide status of those employees.
Right. It's a very complex, very tangled web.
Yeah.
Lots of things for lenders to be mindful of, and especially I would imagine in an environment where they're trying to get their originations back up from the last 2 years we've really had where it's been difficult. I'm sure there's lots of attention on the compensation and kind of how the real estate agent is factored into the whole transaction now too.
Right, and lots of pressure to survive, which I mean, I was a CEO from 2006 to 2008. I understand that pressure.
Right, more so than probably most. I will tell you.
But
I had this job then too. I remember those painful years for sure.
yeah, those are not easy years. But at the same time, you need to build something that's sustainable. And so that's what our focus is, sustainable, addressing the topics in a way that they can be, effectively managed.
So we talked, I know your firm, as I'd mentioned, provides a number of, you have several practice areas. But how would you say Shirk Law differentiates themselves or sets themselves apart from other firms?
I think the real differentiation is just that deep mortgage experience before becoming a lawyer. So hands-on, operational. I've been an originator, a processor, a funder, a shipper, a closer. I've done accounting and written secondary agreements, and I've done a lot in the space, and so I get what's going on. Having optimized workflows for 3 different top 10 lenders, gave me a lot of experience as well. So starting in a small company and touching everything, and then working on the optimization of operations in top 10 companies and scaling that, gives me kind of a perspective that a lot don't. I've done $100 million MSR sales and warehouse lines, and lots of different things, wholesale agreements, correspondent agreements. When I'm dealing with manager compensation, and we see a lot of branch managers whose departure from their existing company is tied to the fact that they have disputes over compensation. And companies are losing productive branches because they're not writing good contracts to begin with, where there is a clear and objective, reproducible method of compensation. And those are the same objectives you look for in just a regular originator compensation in order to be compliant and make sure that the Bureau is going to follow your compensation model and not allege other things. If you don't have it documented, you're subject to them deciding what the basis of compensation was. But in manager compensation, it ties back to the same thing. If the manager can't recreate what their compensation is from actual data, then they're going to have, at some point in time, a dispute over whether they're getting the amount that they are entitled to. And so getting a clear agreement there is really critical. And knowing the difference, that what a purchase advice is, and that it's not what an attorney tells the company in an acquisition of a branch, but it's what they get every time they sell a loan, is critical. Understanding those details. We've seen branch managers blow up over warehouse costs and funding fees that weren't included in the agreement when they were on a net compensation model, and those are real costs, but they need to be described to begin with.
Right. Yeah, definitely. Your background and history in the mortgage industry is definitely a different perspective that you can offer to your clients. So thank you for sharing all of that with us. David, Shirk Law is a proud sponsor of our upcoming Legal Issues and Regulatory Compliance Conference. You will be a speaker on our Labor and Employment Law panel, and thank you for your support. Can you share with our listeners why the firm chooses to support the California MBA?
Well, CMBA has been one of the leading state mortgage industry advocates for as long as I can remember. I got started in Oregon. My family's from California, but CMBA, even back in the 80s, was active, and through the 90s was just growing in their advocacy, and they've done an amazing job at keeping their members informed. And in particular, the Legal Issues Conference that CMBA does is consistently one of the most informative conferences that I attend. It's a great gathering of really top-notch people, and I learn something from the other speakers every time I'm there. I don't always do that at all the rest of the conferences. Uh, there's usually something I take away, but at CMBA, it's always, something material that I really I need to think about on the flight home. And so really enjoy that opportunity in a smaller setting to have such a great group of people.
Well, we're looking forward to it. And again, thank you for the support for our conference. To any of our listeners, you can visit cmba.com, go to our events page and register to join David and our other legal experts talking about the top issues in legal and regulatory compliance in the industry. David, thank you so much for being on Connect. It's been a pleasure.
Thank you, Susan. Pleasure to be here. Enjoyed it very much.
And thanks to all of you for joining us today. To access any of our past episodes, you can follow us on our YouTube channel. We're also available on SoundCloud, Apple Podcast, and Spotify. That's it for this week, and we'll see you next time on Connect.